Okay, the market's been a sea of red all week, right? And every headline you see is just screaming fear. But what if I told you that fear might just be part of a much bigger plan? Today, we're going to decode something called the Greenland Gambit to figure out what is really moving the markets. So, let's dive in.
So this is the big question on everyone's mind, isn't it? Are we looking at the edge of a major collapse, or is everything we're seeing just the opening move in a very predictable and potentially profitable game? Well, that's what we're here to find out.
I mean, you can't escape it. The news is just saturated with anxiety. We're watching the S&P 500 drop, Bitcoin's taking a pretty big hit. There's this general feeling that things are, uncertain. Let's start by digging into what's actually fueling all this negativity.
The main story, the narrative they're pushing, is pretty clear. There are geopolitical tensions flaring up between the US and the EU, and that's spooking investors. And look, that makes sense. When you have major economic powers clashing, it creates ripples of uncertainty. And when investors get spooked, they sell. That sell-off is what the headlines grab onto, and it just creates this whole cycle of fear. But is that really the whole story?
To get the real picture, we need to look past all that noise, all the screaming headlines, and instead follow the smart money. And you know where that trail leads? To a crucial but often overlooked part of the market, the bond market.
And this right here is the million-dollar question. If we were truly staring down the barrel of an economic or even a military crisis, the folks who trade in high-yield bonds, junk bonds, the riskiest stuff out there, they should be sprinting for the exits, but they're not. So, why not? In this slide, this shows you the huge contradiction. On the left, that's what real, genuine fear looks like in the markets, those high-yield bonds just plummeting as investors ditch all risk. But on the right, that's what's actually happening. Stability. This isn't some minor detail, folks. This is a giant flashing neon sign that the smartest money in the room is not buying the fear narrative.
And hey, don't just take my word for it. Let's put a number on it. Take a look at the HYG. That's a major fund that tracks these high-yield bonds. It's holding strong right above its key support level of $81. It has not broken. If a real crisis was coming, that number would be in an absolute freefall. But it's not.
So what does all this tell us? What's the big takeaway? It's that the bond market's behavior is signaling that the really sophisticated investors, they believe this whole thing is just temporary noise. They're looking past today's drama, and they're seeing a global economy led by the US that is set for some serious growth pretty soon.
Okay, so if it's not a real crisis, then what in the world is it? Well, it's a pattern, a predictable, almost systematic playbook that has been run time and time again. And once you see this playbook, all these confusing market moves start to make a whole lot of sense.
Here it is, the four-step playbook. It's actually pretty simple. Step 1, you create a threat, a big public move designed to spark fear and create pressure. Hey, sound familiar? That's the market drop we're seeing right now. That threat forces Step 2, a negotiation that happens quietly, behind the scenes, which of course leads to Step 3, a concession or a deal. And the final step, once all that uncertainty is gone, you get Step 4, the market rally.
So now, let's take this playbook and lay it right over what's happening with Greenland. Because this isn't some random squabble. Oh no, this is a high-stakes negotiation, and it is following that script almost perfectly.
Now, to really get this, you gotta look at the history. For more than 30 years, Denmark was totally silent about a really horrific sterilization program that happened in Greenland. Then, out of nowhere last year, the Prime Minister issues a formal apology. The question is, why now? Well, the timing is absolutely no accident. It came just before the US started to apply some serious diplomatic pressure.
And that quote, man, that says everything, doesn't it? The Danish government knew this dark chapter of their history was a massive vulnerability. They knew the US could use it as leverage to publicly shame them and force their hand in negotiations. That apology? It was a strategic, preemptive move.
So think about it. By getting out ahead of the story, Denmark basically sent a quiet signal to the US saying, hey, we know what you've got on us. Let's just skip the public drama and cut a deal. This, right here, is the smoking gun. This tells us a negotiated settlement was always the goal.
All right, so this is where it gets really interesting. This is the payoff. A deal is coming. And that deal isn't just going to smooth over some political tensions. It's going to unleash a massive wave of economic activity. Let's break down what that's going to look like. So here's how the deal's going to shake out most likely. The US gets what it really wants: total military control and freedom to operate in one of the most strategically vital locations on the planet. And Denmark? They get to save face by keeping their sovereignty on paper, even if it's not really the case in practice. It's a win-win that avoids a big, messy conflict that nobody actually wants. And for Greenland, this deal is going to be transformative. We're talking about a flood of U.S. investment, not just into military bases, but also into joint projects for things like ports and airfields. There's going to be a ton of funding for healthcare, and maybe most importantly, a huge investment into getting at Greenland's massive reserves of rare earth minerals. And to top it all off, you can expect a new bilateral trade agreement to be put in place. This is what will cement Greenland's new status, basically turning it into a strategic economic hub for the U.S. It's going to fundamentally reshape trade and investment in that entire region.
Okay, deep breath. Let's bring this all back home. We've gone from market fear to geopolitics, from history to economics. So now let's connect it all back to that first question. What does any of this mean for the markets today and for your portfolio?
And here is the single most important takeaway. All the fear, the red on your screen, the downturn we are living through right now, it's just step one. It is the manufactured threat phase from the playbook designed to create leverage for the negotiation. This isn't the end of the story, folks. It's the predictable beginning.
This table just makes it crystal clear. Right now, we're in the threat phase. So risk assets like the S&P 500 and Bitcoin, they go down. A safe haven like gold, it goes up. But just watch what happens when we get to the agreement phase. The S&P 500 and Bitcoin are going to rally and rally hard. And gold, it'll keep climbing. The correction we're in right now, it's just setting the stage for that next big leg up.
And the ripples from this, they're going to be felt everywhere. You can bet Russia and China will respond by boosting their own military presence in the Arctic. More importantly for us, this deal will help kickstart global economic activity. And you know what that means? In hindsight, this little market correction is going to be seen for exactly what it is, a major buying opportunity.
So I'll just leave you with this question to chew on. In a world that feels like it's full of political theater, where leaders are posturing and headlines are screaming about conflict, is it all just a show? A carefully scripted performance where the real story, the ultimate prize, is always about economics? It's something to think about next time the market starts to feel a little shaky.